So I have seen a lot on the internet about this topic and I wanted to cover it real quick. Is investing in an IUL really better than buying term life insurance? Given the complex nature of IULs and their potential for high fees and investment risks, is the trade-off of lifetime coverage and cash value accumulation worth the added complexity and uncertainty compared to the simplicity and affordability of term life insurance? Today, I'm diving into the world of life insurance to see if investing in an index universal life policy really beats buying term life insurance. Let's find out. When it comes to life insurance, there are many options available, but two of the most popular ones are Index Universal Life, or IUL, and term life insurance. On the surface, they seem to serve the same purpose, providing a financial safety net for loved ones in the event of your passing. But they operate in vastly different ways, and it's essential to understand their difference to make an informed decision about which one is right for you. One of the biggest misconceptions about IUL and term life insurance is that they're interchangeable terms, but that couldn't be further from the truth. In reality, IUL is a type of permanent life insurance that combines a death benefit with a savings component, while term life insurance is a more straightforward, affordable option that provides coverage for a specific period. Many people assume that IUL is always the better option because it provides a potential investment component, but this isn't always the case. Another common misconception is that IUL policies are always a good investment, but in reality, they can be complex and often come with hidden fees and charges. Term life insurance, on the other hand, is often viewed as more basic, no frills option, but it can be incredibly valuable for people who only need coverage for a specific period, such as until their kids are grown and self-sufficient. The truth is, both options have their strengths and weaknesses, and it's crucial to understand them before making a decision. Many people are also confused about how to determine which option is best for their financial situation. Do you need the potential for long-term growth and a tax-deferred saving component? Or are you better off with a more affordable, straightforward term life insurance policy? The answer will depend on your individual circumstances, and it's essential to take the time to understand your options before making a decision. Let's start by taking a closer look at how IUL and term life insurance work. IUL policies combine a death benefit with a savings component that's tied to the performance of a specific stock market index, such as the S&P 500. This means that your cash value can grow over time, tax deferred, and you can borrow against it or withdraw from it to supplement your retirement income. Term life insurance, on the other hand, provides coverage for a specific period, say 10, 20, or 30 years. And if you pass away during that time, your beneficiary receives a death benefit. If you outlive the term, the coverage ends and you're left with nothing. One of the key benefits of IUL is its potential for long-term growth, but it comes with a cost. Literally, IUL policies often come with higher premiums and fees, which can eat into your returns. Term life insurance, on the other hand, is generally much more affordable, but it doesn't provide any potential for long-term growth. Another benefit of IUL is its flexibility. You can adjust your premiums, your death benefit, and investment strategy over time. But this flexibility can also make it more complicated to manage. One surprising comparison that might change the way you think about IUL and term life insurance is the concept of opportunity cost. Let's say you invest $10,000 per year in an IUL policy, and over time, that money grows to $100,000. That sounds great, but what if you had invested that same $10,000 per year in a traditional investment like a Roth IRA or a brokerage account? You might be surprised at how much more you could have earned over time. And that's the opportunity cost of investing in an IUL policy. Speaking of opportunity costs, another key consideration is the impact of fees and charges on your returns. IUL policies often come with hidden fees such as administrative costs, mortality, and expense fees, and surrender charges, which can eat into your returns over time. Term life insurance, on the other hand, is generally much more straightforward with fewer fees and charges. When you consider the opportunity cost of investing in an IUL policy combined with the impact of fees and charges, you might be surprised at how much more cost-effective term life insurance can be. Finally, it's essential to consider your individual financial goals and situation when deciding between IUL and term life insurance. If you need coverage for a specific period and you're looking for a more affordable option, term life insurance might be the way to go. But if you're looking for a potential long-term investment component and you're willing to pay more for it, IUL might be a better fit. In conclusion, when it comes to IUL and term life insurance, there's no one-size-fits-all answer. Both options have their strengths and weaknesses, and it's essential to take the time to understand them before making a decision. Remember, it's all about your individual financial goals and situation. If you've had experience with either IUL or term life insurance, I'd love to hear about it in the comments below. If you're looking for a Virginia life insurance agent, be sure to check the comment section and the description of this video. You will find my personal contact so I can assist you with your needs. And if you're looking for more information on financial planning strategies, be sure to check out my next video. I'm Ty, and I appreciate your time. Peace.